Hey guys, welcome back to the channel. Today we're going to be talking about how to use and leverage your credit in order to build wealth. My name is Earl and I'm here to help you master your money and achieve financial peace. If this is your first time tuning into the channel and you do enjoy this video, please consider subscribing to the channel and hit that notification bell so you don't miss out on any more information that we put out here on this channel. So let's get right into it. Recently, I talked about how to go about to build and repair your credit and how to properly manage credit cards, all with the ultimate goal of establishing a strong credit profile so you can leverage that in order to build wealth. Now, the key to leveraging credit in order to generate wealth is to have good spending habits, to make sure you're able to live below your means and just overall maintain a strong credit profile. So in other words, you need to have strong financial discipline. And if you lack that discipline, then you want to definitely not get yourself in a position where you're taking on too much credit at one time. Because credit can be a powerful but yet dangerous tool if you lack the financial discipline necessary to manage it all. Well, with that said, let's go ahead and talk about ways that you can go ahead and leverage your credit in order to build wealth if you already have established those strong financial discipline and those strong spending habit skills. So first, you can leverage a great, strong credit profile in order to get the best low rates on personal loans and auto loans. In order to understand how this is important to building wealth, you need to better understand what rates are to begin with. For borrowers, rates is the cost of borrowing money. So in other words, if I were to borrow you $1,000 and you pay me back $1,000, that means you had a 0% interest rate on that loan. I didn't make any money off of loaning you those funds, and you didn't pay any money for borrowing those funds from me. However, if I charge you a 5% interest rate on borrowing $1,000, when you pay me back, then you're going to be paying me back $1,000 plus interest. So that's the cost of borrowing money. If you have a 0% interest on every loan, then it's no different than you taking that money out of your own pocket and spending it, because you're going to be paying me back the same amount. So why wouldn't you borrow money on 0%, right? So yes, rate is a cost to you as a borrower. From a lender's perspective, the rate is evaluated based on the risk that they're taking on loaning you those funds. So if you have a bad credit profile, then you're a higher risk because you have not shown the ability to make your payments on time consistently. So you're going to get the highest interest rates possible because that lender is taking a higher risk on borrowing you those funds because they might not get paid back their funds in full amount. However, if you're someone who have a strong credit profile and have shown the ability to make your payments on time consistently, then you're going to get the best rates on the market because you've shown your credit worthiness in order to make your payments on time. So now when you use those funds to generate income, you just have to have a rate of return that is higher than the cost of borrowing those funds. So obviously, if the lower the rate, then the lower that rate of return needs to be until you start profiting. And that's how you can leverage your credit in order to start building wealth by making sure you get the best low rates. Now, the next one of the most common ways to leverage your credit in order to build wealth for yourself and your family is to be able to leverage that credit in order to obtain a mortgage to purchase real estate, whether that's a primary residence or investment properties. Now, first and foremost, I highly encourage everyone's goal should be to purchase a home for themselves and their family one day. It's okay if you have to rent, that's perfectly fine. But eventually your goal should be to own. Because when you're renting, first of all, most likely you're going to be spending more in rent month over month than you would be paying on a mortgage for that same property if you were to purchase it. Secondly, you won't be able to take advantage of the appreciation of that property over a long period of time. So your wealth won't be growing because you won't be having access to that equity in that property, even if you lived in that same home for 20 years. And lastly, you won't be able to take advantage of the tax savings that comes with owning real estate. For instance, you're able to write off the depreciation on that real estate. You're able to write off the taxes and insurance on that property. So there's so many benefits of owning real estate and building wealth. But it doesn't stop there. The wealthy understands the power in this. And what they do is they continue to leverage their credit to not only purchase a primary home, but also purchase investment properties. Because now you're able to also generate cash flow, additional streams of income for yourself and your family that you can then turn around and continue to invest in whatever it may be, if it's a stock market, into a business, whatever it may be. On top of that, you're still going to be able to take advantage of those benefits, not on just one property, but multiple properties. Like I mentioned earlier, the appreciation on those properties as the values go up. And obviously now it's not just one home, you have multiple homes where the value is increasing, which means your net worth and your wealth is increasing year over year. So that's a powerful, powerful way to utilize your credit in order to build wealth, is to purchase real estate. Now, for my self-employed and business owners, or even my individuals who have a side hustle business, one way you can leverage your personal credit in order to obtain business lines of credit. This is a powerful, powerful tool because your business itself doesn't necessarily have to have established credit and don't even necessarily need to have a positive cash flow in order for you to obtain business lines of credit for your business by utilizing your personal credit as a guarantor for that business. The great part about this is that although you may be the guarantor on that business line of credit, on a business loan, that debt does not reflect on your personal credit. So it does not impact, say, your debt to income ratio if you wanted to obtain additional mortgages, to purchase additional real estate, or obtain additional financing for whatever purpose. So you're able to leverage your great credit history on your personal side in order to obtain business funding for your business so you can invest in your business, grow and scale that business to generate more income for yourself and for your family. So that's another great way you can leverage your credit in order to continue to build your wealth. Now, for those of you who have hung in there with me and have lasted this long, thank you very much. So I have a special treat just for you. We've talked about ways that you can leverage your personal credit in order to start generating wealth for yourself and for your family. Now let's talk about how you can leverage your family, your spouse's credit in order to help expedite the rate at which you generate wealth. I can't tell you how many times I have cringed because someone is applying as a joint borrower to obtain, whether it's a mortgage, an auto loan, a personal line of credit, just because they're married. Listen, I get it. We're married. We share everything. We're one now. I get it. But there's no reason why both you and your spouse need to be on every single loan that you guys share if one of you can qualify on your own. Because if you're using both credit profiles to, say, get a mortgage, then that payment associated with that mortgage is going to be in both your credit reports. And if you go to try to get additional financing in the future, then the payment is going to be included in both of your debt to income ratios, even if just one of you guys are making the payments every single month. So again, if you're able to leverage your credit to get that loan, get that line of credit, then keep your spouse out of it, or vice versa, so that you can leverage the other individual's credit to get access to even more capital that you can use to make big purchases and continue to invest that money to generate wealth for yourself and for your family. Now that you're a married couple and you're a unit, then you want to make sure that you are now twice as strong as you were when you were two individuals. So don't shoot yourself in the leg by getting a bunch of joint debt. Okay, so definitely look for ways that you can leverage even your family credit, especially if you might not even have the strongest credit profile at this time. Maybe your spouse or your mom and dad are able to get access to better offers and better rates and more capital that you can utilize to invest. Then that's another reason why you should look into looking for ways that you can leverage other individuals' credit in order for you to generate wealth for yourself and for your family. So in summary, guys, that's just some ways that you can utilize credit to generate wealth for yourself. Remember, the stronger your credit profile, the easier it's also going to be to establish business relationship. Because best believe, if you're trying to become a partner with someone else who are more established, they will take a look at what your credit profile looks like to see if you're someone who's trustworthy, who has a strong credibility behind them. And it's also going to just make it a lot easier for you to generate wealth overall. So if you enjoyed this information that I shared here and you enjoyed this video, please go ahead and hit that like button. It will help out the YouTube channel tremendously. And also, if this is your first time checking out this channel, and if you enjoyed the time that you spent here with us, definitely consider subscribing to the channel and hit that notification bell so you don't miss out on any new videos that we release here. And lastly, if you enjoyed the video and you have other thoughts or comments or concerns, please go ahead and drop it down in the comment below. Or if you have ways that you're currently leveraging your credit in order to build wealth for yourself, please share in the comments below. I'd love to hear about it. Lastly, if you know someone who would enjoy the same information that you've got here, please go ahead and consider sharing this video with them as well. Thank you guys for tuning in. I love you guys. I'll talk to you guys again soon. Take care. Peace.